IL&FS collapse caused a ripple effect in the entire space with concerns around liquidity. This in turn has prompted some non-banking lenders to hold back from large disbursements. But does the sector have the wherewithal to survive this onslaught? And did this root shock create the perfect opportunity for lenders to introspect and set their house in order? Joining us right now to talk about all of this and more is someone who tracks the sector very closely, Digant Haria of Antique Broking. Digant, thanks very much for taking out the time. So, just put it into perspective for us. While obviously we know that the sector is going through challenges and stresses of its own, so far with Q3 on its way, have things changed meaningfully with the kind of numbers that you've seen? And obviously there is a big difference between the numbers of the larger names, the more strong, stable names versus the smaller ones.
Yeah, so when this when this entire IL&FS crisis broke and we had this liquidity freeze in the month of October, that time there was an intuition, or there was a belief that in a few months at least the good ones would get back to normalcy and the not so good ones will probably never get back to normalcy. So that was the feeling then. Now we are 2 months, 3 months into this crisis. We have already seen what Q3 could deliver for a lot of them. So as it emerges, there are 3 different worlds within the NBFC space. So the first is the large AAA rated and companies who are backed by good parent and strong business models. I think for them the liquidity is absolutely back to normal. So the companies which come in this category are the usual suspects, the HDFCs of the world, the Bajaj Finance, or to some extent L&T Finance. Then in small ticket lenders you would have people like Muthoot Finance or Manappuram who come in this category. So I think these are the ones who are not facing liquidity challenges whatsoever. So they are able to borrow from the bond market, from the NCD market, from the banks. Maybe yes, the cost of borrowing may have gone up by 20, 30, 40 bips depending upon what is the main source of borrowing for each of them. But liquidity, we can safely say that that challenge is over for this first category of NBFCs. Then there is a second category of NBFCs where the markets, the banks and the bond fund managers are a little confused that whether these businesses will they be able to bounce back, or will they not suffer from any kind of crisis in the future. And then we have the third set, which will be companies which are definitely under a lot of pressure, and for them bouncing back to the old glory days look like a very, very distant dream. So yeah, that's coming more and more clear. So yeah, the first category results which were good were Muthoot Capital, which does two-wheeler financing, was very strong. Bajaj Finance was exceptionally strong. HDFC, we saw that despite whatever happened, it was a reasonably decent quarter. And in this second category, I think some companies which come would be companies like a PNB Housing, which have a good credit rating, but the margins are under a bit of pressure. Maybe LIC will also come under this second category, that liquidity may not be an issue for them, but yeah, they will still face some earnings pressure.
Let's talk about some of these housing finance companies now. Most of them have gone and taken the route of securitization, and securitization in fact has been at its peak in the first 9 months of FY19 if you were to combine even 2017 and 2018 put together. While the larger ones, like you say in your note, are expected to grow well, there will still be margin pressure. You want to highlight that in a bit more detail for us?
Yeah, so we came out with our note also in October 2018 that housing finance and wholesale finance are the 2 most vulnerable pockets. See, because these are very, very thin margin businesses, and when your borrowing costs go up in a very short duration, it takes a lot of time for your ALMs to adjust, for you to pass on those costs to your borrowers. And because there is always so much competition, you cannot pass on the complete borrowing cost to your customers. So as we saw, HDFC also had some bit of margin pressure, but if you look at the reported earnings, the margin pressure does not come, it's not very obvious because they do a lot of these direct assignments. And this route under the Ind AS, and especially after this IL&FS crisis, has become very popular. We have almost seen 90,000 crores worth of securitization or direct assignments happening. Some of it is obviously because government has asked a lot of these PSU banks also to help NBFCs with the liquidity, and some of it is because the banks see this as a chance to get good assets at good rate. So I think margin pressure is clearly there, and I think markets will be gentle to the companies which only have margin pressures. So companies like PNB Housing and HDFC, they had margin pressures, but asset quality was fine, liquidity was fine. So maybe another 1 or 2 quarters of adjustment and life will come back to normalcy. But then there will be some smaller companies which may not be able to really do well. Someone like maybe a Reliance Home Finance or a Repco Home Finance, they will take a lot more time to adjust because the liquidity for them is also not as easy to come as it is for the big boys like PNB or your HDFC Limited.
Let's talk about cost of funding.
And there is a third category, companies like Diwan and Indiabulls.
Okay.
Yeah.
Sure, go ahead, make your point.
Yeah, so cost of funding for all is, so what I'm saying is the third category is Diwan and the likes of Diwan and Indiabulls who are struggling on liabilities, margins and asset quality, all the three fronts. So I think the battle for them is longer. The battle for HDFC and PNB Housing will probably end in a quarter or two. And the guys like Reliance Home Finance, somebody who's in the second category, I think the battle will be longer than the first but shorter than the second. So that's about it. And I think borrowing costs have gone up for everyone. But it's coming back. It's coming back to normalcy. For example, HDFC could raise 1,000 crores in 3-month paper at 7.35% last week. That's almost back to pre-crisis levels. So maybe 10, 20, 25 bips hike for AAA rated players, around 35 bips hike for AA, and around 50 bips hike for others is what we'll have to live with as a system, and that will make them slightly lower in terms of profitability and lower in terms of market competition, because the banks are not facing an equally sharp rise in borrowing costs.
Right. So, while you already highlighted HDFC, Bajaj Finance for themselves have seen about 8.2%. But the difference between some of these names versus, the likes of the smaller ones like an Edelweiss, it's pretty divergent from 8 to 11.5%. You think that there is a chance of, some amount of cannibalization and these bigger companies taking away market share now?
Yes, absolutely. I think we are already seeing that. For example, DHFL did not disburse, Diwan Housing did not disburse anything in the third quarter. Their loan book did not grow. So somebody has taken up that market share, right? So maybe HDFC was cautious this quarter, Group Finance was cautious. But I think now the environment is starting to get a little better. The fear is much lower than what it was in October. So maybe in the coming quarters, you would see that those guys who can access funds at good cost, I think they will gain a market share. Bajaj Finance also did not gain market share. They just did what they were supposed to do. And I think next 2 quarters onwards, they will increase their aggression, or maybe they will try and capture some more market share. So that is happening, like the first category of NBFCs will clearly be much stronger in times to come. The last category of NBFCs will struggle to come back to normalcy. That is what we think is panning out.
Just one last question before we let you go, and this is from the vehicle finance point of view. And the market itself is a bit subdued, be it two-wheelers, be it four-wheelers. Disbursements, do you feel will take a temporary hit, or probably it could be slightly more prolonged?
See, I will just look at these two products. Okay, two-wheeler finance and commercial vehicle finance have very different dynamics. Okay, so two-wheeler financing, the penetration is very low. The penetration is as low as 35%. So out of every 100 two-wheelers sold, only 35 are getting sold. Now, because the price of two-wheeler has increased so sharply, I think financiers will have a very big role to play in the coming times, because it's after 10 years that prices have gone up in double digits. So I think two-wheeler financing as a product will do very well, even if we don't see very good growth in two-wheeler. So we are very positive on that space. Muthoot Capital is one of the companies which operate in that space. When it comes to commercial vehicle finance, the market is little slow, but we just feel that the slowdown will not be as acute as we saw it in 2013-14. And see, two-wheeler financiers like Cholamandalam or Shriram Transport, they have a very big portfolio. Like they do cars, they do MUVs, they do LCVs, SCVs, used CVs, new MHCVs. So if the CV sales are slow, definitely these companies will slow down, but not to the same extent. For example, if an Ashok Leyland has a 0% growth, I think Cholamandalam can still end up doing a 12 to 15% kind of growth because of the diversified portfolio and used CVs. Used CV is a market which will never go very fast or very slow. It will go at its own natural 10 to 12% kind of rate. So I think two-wheeler, this CV financials also present an opportunity to the investors because the correction has been sharp, and we believe that the growth and margins may not collapse in a way that the stock prices are trying to tell us. So yeah, maybe this is one space where stock price falling could be an opportunity. So yeah, that's our take. And there is one more sector, gold finance, which we are the most positive on. So I think that sector has not reported numbers, but at least we know that liquidity crisis is over for that sector. There is absolutely no dearth of liquidity for that sector.
All right, got that. Digant, thanks very much for joining in. Really appreciate you taking out the time and sharing your thoughts with us here on the platform.